Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Rochelle Petersen. Rochelle is a partner with Growth Capital Investors, which focuses on multifamily syndications. Rochelle, thank you so much for being on The Wealth Flow. Can't wait to dive into your story.
Thank you for having me.
Yeah, and what I typically like to start with is, just your background, where you grew up, and what led you eventually to real estate investing and then investing in multifamily.
Yeah, well, so I grew up in San Jose, California, in the Bay Area, and I did several things. Like while I was in college, I worked a lot. And so I did banking for a while, and I ended up in recruiting. And I did property management for a little while. So I kind of just had this varied background where I was doing full-time jobs for a little bit during college and ended up with those different things. And then I decided I wanted to be a stay-at-home mom for a while, so I did that. And eventually, after 16, 17 years, I decided to do my own business, open my own business as a professional organizer. So I would go into people's homes, set up systems for them, organize any area. There could be a pantry, it could be a garage, anything like that. And then so I had 4 boys during that time. And my third boy was graduating high school, and he said, this is after I started I was about 5 or 6 years into the organizing. And he said, I want to be a real estate investor. And I was like, you're 17. How are you going to be a real estate investor? You don't have money. So he's playing basketball, and he's like going to go to the junior college to play basketball, more going to college just because he can play basketball, not really for college. And so he's graduating, and I'm kind of starting to panic. Like, okay, well, if he's not going to go to college, I got to figure out something to help him learning wise, right? Like if he wants to be a real estate investor, I'm just online trying to figure out like what programs are out there, And so I started just trying to find little trainings, and I came across this one multifamily training, and the first event was free, so I was like, let's go listen to this, like maybe see if it's something that you'd be interested in doing. And so we get to this training, and he said, this is better than I wanted. I wanted to do wholesale or house hack, and this is better. This is bigger. I want to do this. So we sign up for their $1,500 weekend of 3 days of, basically learning everything, but it's still the surface level.
Right.
So I said, okay, if you want to do this, I'll split it with you. Like I'll pay half, and I'll just go with you because you're still 17. He was graduating. He had just graduated by the time we got to this class, but he was still 17 when he graduated. So I was really glad I went because the mentorship program that they offered, if he had come home and said he wanted to do it, I would have said no way. But after I learned more about it, I was like, this mentorship program not only teaches us, but then we're able to connect with other people, and then we have coaches that'll help us, right? So because I had bought my own homes, like over the years, we had moved several times, bought and sold homes, or we'd renovated a basement in one, we'd added a bedroom in one, like we've done some
House
real
hack
estate
type stuff, yeah.
Yeah, some real estate, but not, on that large of a scale. And so I didn't want to go into it and make any big mistakes, right? And so we spent a lot of time. Well, at first we started to do it around our life. I was trying to do my other business. He was trying to go to college and play basketball. And it was like, we're not spending enough time on this. We're never going to learn all the things we need to learn. So we both had to make room. So he actually dropped his classes. As soon as basketball was over, he dropped his classes. And I was like, just finish the semester. He's like, nope, I want to do this. This is all I want to do. So he was full in. So he spent full time on it with me. And I was 18 at this point. And I just turned most of my business stuff over to my sister. And I was very few hours a week. And so we both just dove in and spent half of our time networking online with all these people that we had met through the process and through the mentorship, or we were learning. So we were on webinars or classes or books or, so we just kind of spent all our time doing that. And then we met some partners. We had an opportunity to do a deal that we did not like in Utah where the underwriting wasn't complete on one property and the other property, the returns were too low for what we had started to tell people that we were looking at, the type of buy box we had.
Yeah.
So when this other opportunity came in Georgia, we both were like, okay, this underwriting's better. The team is good, so we were all in on that. And so that's what we've been spending since May or June, all of our time on. Not all of it, but a lot of time on that since then. And we're in November now. So we closed on that October 1st. And our property manager is doing amazing already. She's already bumped the rents more than we projected,
Nice.
So we were really excited about it because it's like it's got a lot of the cushions that you want in an underwriting, like lots of little opportunities. Like, so one is the cap rate, right? We did the cap rate higher so that even if it goes up, which we don't anticipate it will, then there's that room. We had $500,000 in reserves. I mean, there's really good things about this property. And so it felt really good to have a good team and then like a good business plan. So that's where we're at now.
Yeah, that's great. So you kind of tapered back your business and you went all in. Your son went all in as well after basketball was done, dropped his classes. And so the two of you together, it's exciting to do something like this with one of your kids. I mean, that's kind of cool in itself. But tell me a little bit about what prepared you for this as well. When you said you networked with some of the people that are part of this program, did you have an opportunity to, how are these deals coming to you and how are you reviewing them and deciding which ones you feel like are going to be good? Tell me a little bit about that, I guess.
So so the first question was how I was prepared. Is that what you're saying? Or how I prepared myself? And then the second one is more like, how are we finding deals? Is that what you?
Yeah. So how are you just, preparing yourself to know what is going to be a good deal when I see it? You'd mentioned that you looked at one, the underwriting wasn't complete and and then another one, maybe that the returns weren't quite what you'd been telling people. And so what I'm imagining is that you're probably out, kind of talking with potential investors and saying, hey, we don't have a deal yet, but if we got one, here's what it's going to look like. And, maybe that one didn't meet what your expectations were on that. But I guess some of the background stuff that you guys are doing, as you're preparing and trying to find, this deal.
Right. Well, so because I had run my own business before, part of the preparation for me was knowing that taking this on meant starting a business. It wasn't just like, oh, I'm going to buy some real estate, right?
Yeah.
It's definitely still running a business. So the networking part, that kind of stuff was second nature to me because I'd already had to do a lot of that. But it was a community we were part of as this mentorship program. So we were able to connect with other people in the space, ask them what they liked about markets they were looking at, ask them, what did they like about the deals? What are they seeing? We spent a significant time on underwriting to understand the numbers. And then because we're in California, we wanted to spend time capital raising because there's access to money here, right? Like people make a lot of money here. And so it's like easier to find accredited investors. And so we were going to events, like just real estate events, just anything to kind of just get out there and start meeting people. And in talking to them about like, hey, this is the kind of assets we're going after. This is what we look for. This is the kind of return. It was sort of like pre-capital raising, like they tell you to get soft commitments, right, from people. Because when a deal comes, that's kind of hard to start explaining all of the details of the investment. And at that point, it's like almost too late to raise the capital. So it's good to try to raise that capital ahead of time, or at least get some interest. And then sometimes people aren't able to move their money. Their money's in something they can't invest right now, even if they are interested. So it's good to have a list of people you can go to and say, okay, we've got a deal. Here's the details. Number one, are you interested in this one? Number two, is your money available to put in it? So
Yeah.
So when I say we were networking, a lot of it was within our community of other not exact, but very close buy box. But then the other networking was finding investors.
Okay.
So we spent time learning the underwriting and capital raising, like most of our time in there. And then there's a whole, obviously, other section after you buy the property of asset management. And that part I was a little more comfortable with because I've done property management before. And so I wasn't super concerned about learning that side, but partnering with people that knew how to run that side. And then I made sure I'm raising capital, I understand the numbers so I can explain it to an investor, because it's hard to talk to an investor if you don't understand the asset, right? Like the ins and outs.
Yeah.
So, yeah.
Yeah, and on some of the investors that you were finding, are you going to different real estate meetups, local RIA, or what kind of investment? What kind of meetings and stuff are you?
I would say they're all a little bit different. Local real estate mostly. There's one that's just for girls. I mean, their boys come too, but
Right.
it's like a she invests, but and then there's a couple that are just real estate related. They're run by people that are in the area doing high level or high volume wholesaling, or and they bring these really experienced speakers that have, and it could be any real estate strategy. It's not just multifamily, right? Like everybody's doing different things. But I've learned a lot about a lot of other types of investment strategies, and it's actually helped me understand investors, where they're coming from. Because if they're used to putting their money in a certain kind of investment, it's like, well, why would I put it in this one if I'm making money here? And what's the difference? What's the benefits? What's the pros and cons compared to what I've already been putting my money in, what I might want to put it in now? So most of it was local, but then we did go to WealthCon in Las Vegas. And so that was really fun to connect with different types of people that are also doing a high volume of business. So we do want to go to more conferences, but we've already, flown out to Georgia a couple times trying to get everything going with the property, and then spending time on capital raising and everything else. So it's just, we closed on the property, but we're still finishing our raise. And so right now it's like, I don't want to go to too many conferences because it's like, want to focus on this property and make sure everything is running good on it. So
Yeah, for sure. And so tell me a little bit about the one in Georgia. You said it's 152 units. So is it you and several other general partners, or tell me a little bit about what, kind of what the structure looks like, I guess, behind the scenes.
Yeah. So we have partners in Florida, New York, Utah, and California. So we're all capital raising on the deal, and then everybody else kind of has little parts that they're doing. But yeah, it's a general partner team.
Okay.
Some of them have, like, our main sponsor has a lot more experience than everyone else, but then there's varying levels of experience on the deal. Some of them have a couple deals already, and then my son and I, it's our first one. So
okay.
And are they? Oh,
yeah.
Wait, did you want me to know or say something about the property? Is that what you were saying?
Well, and then I guess so with this one, it's 152 units. Like, what was the? Is it? Are you able to increase rents on it? What are some of the kind of the value add, or how you're going to bring value to your investors on it?
So the part that I thought was the best is the rents are $200 under market rent. So the previous owners did not push rents at all. And so when we did the market research in the area, everything was like in the 900s, and our rents were in the 700s. And compared to California, that's like, it blows my mind that there's still rents at 700 anywhere. But
right.
But yeah, that kind of shocked me. But so that was our favorite part. But then our property manager has felt that even though we projected 150 and we wanted to get to that within like a year or two, she's already done it. Like, no way we can get more, like over 200, 225 to 275, depending on the unit size. So that was the first thing I really liked about it. But that's not the only value add we're doing. There's a pool there that's fine, but we want to, next to it's like a tennis court that's original because it's a 1983 build. And so we're going to take that out and make a different, like barbecue area next to the pool to kind of expand that to be more of a fun hangout, people, community area. Yeah. We may or may not do a dog park. We put that into our business plan in case we wanted to, but we're doing a survey to make sure like that's what the residents want to. Because, when you do your business plan, you have all these ideas, but it's like once you actually get in there and you find out, oh, they'd rather have this than that, but so that is in the plan. The outer part of the complex had like new roofs and it looked really nice, like outer part. The inner, they had never really renovated any of the units. And so we're doing that too. So basically between the value adds and then like the cushions we had in the underwriting, we have a lot of confidence it's going to make a lot. So we're excited about it.
Yeah, that's cool. So does the kind of the lead I mean, he may or may not be lead, but I would just call him lead GP, the guy with a little bit more experience. Has he done other projects similar to this that need some kind of a, maybe a refreshing the interior, that kind of thing?
Yeah. So he's done 12 full cycle exits. So he's, completely sold that many. And we had budgeted $6,000 per unit, but it's looking more like it's going to be about $4,000, and that's only in the units that really need a lot done. So,
okay,
some of them won't even need that much done. So we've kind of over budgeted for that for sure. But yeah, he's had a lot of experience with that, and then he has another property that's about 20 minutes away, and so that's why one of the other reasons he knew that area was going to do well, because he has another asset that's performing well. But a lot of it was like the market research. Like in Macon, it's like an hour and 15 south from Atlanta. Mm-hmm. So it's near a major, city, but it's still a pretty good sized city. And like they have, what do they call it? Extend the airport runway. They're working on extending the airport runway, which is great for business because it's like a cargo airport. And then they're putting money into infrastructure in that area. And there's not a lot of new apartment builds, so the competition is really just the other apartments in the area, and most of them are like 95% full. So when you look at like competition-wise, there's not like anybody that can take away from it. And then even if a new build came in at this point, they're not going to really be our competition because we only plan to be there for 3 years. Our business plan is 3 to 5, but the way it's already going, it looks like more like 3 or less. So,
okay. And so you and your son work together on this. So you're a co-GP on it then, versus like a fund of funds where you're a fund underneath the initial. Okay, and and so tell me a little bit about how much you guys were able to raise, and tell me a little bit about what that looked like. Was that easier than it looked? Or was it more difficult? Or
I feel like it was really difficult. Because even though we had people that were interested and were ready, it was like, oh, well, the election, or, oh, I'm buying this other business. So I really need to hold my money to make sure to see if I have enough to buy this. And I don't want to use too much of it, So it ended up being really rough. But I had talked to several different deals that I know are going on just through our network with other people that are buying. Mm-hmm. And even experienced capital raising, people that spend a lot of time doing capital raising, a lot of them are struggling with finding enough capital right now. And I think part of that's like the interest rates are higher. People are thinking there's not that many deals. Like the rumor is there's no deals out there in multifamily. I had several people say that to me when I was at WealthCon in Vegas. And I was like, I wouldn't say there's no deals in multifamily. I would say there's less deals. They're a lot harder to find. But there's still plenty. And so I think there's been kind of a shift in the market of people wanting to invest in them. And I don't totally know why. It's just my guess is like from what random people have said, comments they have said like, oh, well, I heard there's no deals. Or, oh, interest rates are too high. How could you make money? And that's just like, that's why we spend a lot of time educating. It just means they don't totally understand the asset if they start saying certain things like, oh, well, interest rates, how could you make money? Well, with ours, we're assuming a loan. So we aren't paying the higher interest rate. So it's difficult to find properties that have loans that you can assume, right? Like they'd have to be a few years old, right? Or, because the interest rates have been so high lately. But so yeah, it was difficult. We had, a couple family members that were like, yeah, let's jump in. And then a couple friends. And then it was like finding, like, I feel like the strangers were a little bit, not strangers, but new people to us were harder to, you have to develop kind of a trust with people, right? And
For
so
sure.
that I feel like some of it is like, okay, well, we trust you, but we want to see how your deal goes kind of thing, right? They're like, let me know about the next one. I'm like, well, this one's really good, but okay.
Right.
The next one, that's fine. So yeah, it's been difficult, I would say, more difficult than I thought. And I knew it was going to be difficult. And I think this industry in general, real estate, you can run into, no matter what the strategy is, if it's multifamily or something else, you can run into a lot of roadblocks or things don't go perfect or right. And so you do have to have a strong mindset when dealing with any kind of real estate. So
Yeah, for sure. And so ultimately, how many people were you able to get to invest in this initial one?
right now it's just three. They have
Okay.
varying degrees of, one's 250, one's 50, one's 100, so it's like they're kind of all over. But we have, it's like some of them are trying to put money in, but they're like, wait, I need to wait till this money moves here. And so it's like, it isn't all the way in yet. So, we're hoping for more. We're still working on it. So
Yeah, no, that still sounds good. I mean, even though it's a few people, I mean, somebody willing to put in the 250 kind of helps out a lot, and another person with 100, and so yeah, that's good. And so. And you're thinking on this that there's probably, obviously this could change, but you're looking at somewhere between a 3-year to a 5-year hold. And tell us maybe a little bit about some of the assumptions on that one, as far as, when you were underwriting it, kind of what you're anticipating the exit to look like, that kind of thing. I know that's, there's no guarantees by any means, but just kind of as to what you guys underwrote it to.
So, well, the way we underwrote it, if someone comes in at 100,000, then they walk away with 190. So it's a 18.7 ARR. So that if you look at the overall number, that's what they would walk away with.
Yeah.
But that's like our conservative numbers, and so like we can't promise that it will be more, but we believe it'll be more than double their money.
Yeah.
But and since we're only really a month and a half in since close, it's like hard to tell for sure. But like based on what our property manager, because we stole her from that other property that was performing well, she's like, I know what I'm doing. Now we're gonna push this to this to this. So so based on the numbers she's already pre-leased and the numbers she's going after, we kind of did a quick calculation, and it's like, mid 20s is probably, or even higher. So I have to be careful what I say because it's like,
For sure. Yeah.
I get in trouble with the SEC if I promise higher than that. But like it's gonna, the way that everything is going right now, in the first like 9 months, we'll probably blow everything out of the water, and then it'll probably slow down a little bit, right? Because it's like by then we've upped a lot of rents by then. So yeah, did that answer your question?
Yeah, no, it did. And I appreciate that. And I think just even, one nice thing it sounded like on this particular one, just that you had an prior owner that had not, and that's not that uncommon, that has not really pushed the rents, has kind of, just tried to keep it occupied. And a lot of times people just don't keep up with the market. So to find out that you've got, a potentially a $200 spread between market and where the rents are, that alone is pretty awesome. And then sounds like even the renovations on this one are coming in less, than what you anticipated. What is do you know kind of how are you strategizing from the renovation part of it? Are you waiting as leases come up, then you guys are going in, refreshing the units, then putting them back online? What does that look like?
Yeah. We're not kicking anyone out. So, there were several that were empty, and then there was a few that had were empty that we didn't know about, like at close.
Yeah.
Like they're supposed to disclose how many are empty. And so she was like, why aren't these people paying rent? She starts knocking doors. There's no one there. So we found out there was more. So that's part of the reason it's like, okay, she's already pre-leasing all of these and working pretty fast and getting the rent more than we thought. Right. So we're just focusing on like trying to get the traffic higher, which she already has pretty good traffic. But kind of working on making sure that all of those are leased as soon as possible, which she's doing great. And then we're like, if somebody if they're unhappy with their unit, they can move to another unit and then we could renovate it. But yeah, we're not kicking anyone out right now. But as their leases are renewing, she's having them bring in pay stubs and like pre-qualifying them and bumping their rent based on that too. So, their rents are going to be a little bit higher of a bump than your typical just because they're so low. And then if they qualify for that, then they can go up, but not enough to like make it a financial stress for them.
Right. Yeah. Makes sense.
Yeah.
Okay. And then, and so you've gotten this one under your belt. Obviously, it's still, ongoing. And so from a investor communication standpoint, tell me a little bit about what that looks like. How are you communicating with the people that put their money with you, and how often, and just kind of keeping them updated, I guess, with how everything is going.
Right. Well, so as a team, we have only sent one update because it's only been like a month and a half. But after the first month, we sent like the first update, kind of giving them the details of like what's going on. This is how much we're bumping rents. This is how many units we turned over, and kind of giving them just kind of an overview of what's happening. And of course, if they had more questions, we could get on the phone with them and explain more and tell them more about what's going on. But communication is important. Getting the K1s out on time. My sponsor is very serious about that. He's like, everybody needs to talk to their investor and make sure all their information is correct because we are getting those K1s out on time. So
that's good. Yeah.
So yeah, communication is very important, and then the K1s. So.
Okay. And then how about your son? What's your son's name? Who's kind of partnering with you on this?
His name's Cade.
Cade. And so, yeah. What does Cade think about it? So I mean, were the two of you, when you talk to a potential investor and show them like the pitch deck on it, are you guys doing that together, or what does that look like as a mom and dad, or mom and son team?
Most of the time I feel like we're together. We do go to events and then like, we'll end up talking to different people at the same time, like we're next to each other, but then so he's fine on his own to explain it all. He understands because we've been spending so much time on it. So I think some people are really surprised that a 19-year-old can hold a conversation about an investment like this. But, I think even on calls, but so it just kind of depends. Like sometimes I'll be by myself because he's got a different appointment or something, but a lot of times we do a lot of it together. So.
Yeah, that's neat. So did this kind of fall in line with what he was expecting initially when he said, geez, I want to, drop my classes and go all in onto this? Does this kind of fall in line with what he was hoping for?
Yes, because he liked that it was a long-term strategy, right? So he was like, okay, even though a lot of what we're getting paid is going to be at the end of when we sell the asset, he's like, I still feel like this is a really good wealth building tool. And he is starting to learn wholesale too. And that was just kind of to bring in quicker cash, right? Because after we had kind of done the initial like close and everything, he's like, okay, I want to start learning wholesale too, so that I can bring in some quick cash. I'm not just relying on, the long-term thing, because he is 19, so he wants more money. But he does, he delivers bounce houses on the weekend, so he has cash and money. But it's funny because we both went different directions. Like I was like, okay, my next thing I want to learn is RV parks. He was like, I want to do wholesale. And I'm like, well, if you learn wholesale, then maybe you could wholesale apartment complexes now that you know how to value them, right? Like, like I won't pay that for that, or I know someone will buy it for this, right? So it's kind of fun. Like we started with multifamily, but then we're both kind of taking our own interests too on the side.
Yeah. No, that's cool. That's neat. And it's neat that you get a chance to do some of these things together. I've got two daughters, and I have one that's more interested, but hasn't. I don't know that want her dropping her classes at this point yet, but she could she could have a little bit more interest in it. I think I'd get excited about that. So, but that's cool. And so, what do you see? Are you guys out there kind of looking for the next multifamily deal? And if so, kind of what is your buy box? What areas are you looking geographically?
So we're not actually spending time sourcing deals right now. We've had a couple people say, "Hey, we've got this deal in North Carolina," or "Oh, we have this deal we might have something in northern Arkansas or even in Georgia," right? Like people have said that to us, like that we've met. So there's full partnerships that we could go into, but I really want to focus on this one, and then when this raise is completed, then maybe look at the next one. But as far as markets, the ones I like the best right now are North and South Carolina, Georgia, Northern Arkansas, Kansas City.
Yeah.
Yeah,
all
those
good
are my
markets.
favorites. If anybody said that they had a deal in that and we need more partners, I'd be like, "Okay, send it to me. I want to look." If they said, "Oh, there's something in I don't know, some other random state, Illinois or something," I'd be like, "Not really interested."
Yeah.
I mean, I'm sure there's deals everywhere, right? But I prefer the ones that are the major emerging markets right now, where the job growth and the population growth is. And so it does scare me a little bit to go outside of those. But I also, haven't done research in those other areas either. I think looking at CoStar reports is helppful, and where you can get a really good idea of areas. And I've only looked at CoStar reports in certain areas. So, I'm sure I don't want to say if you know someone that's raising for a deal in some other state, I'm not saying it's bad. It's just,
Right.
you got to do your market research. You got to know what's going in, in that market as far as jobs, what the local government's doing. That was a big one for Macon. They're doing a lot of stuff in the local government, and we really liked hearing about all the stuff they're putting in place in the city. So, yeah.
Yeah. What are some things that they're doing there in Macon?
Well, if you look at some older data, their crime doesn't look so hot, right? But there's plenty of areas. I don't know if you know where anything about Oakland, California, but Oakland, California has beautiful, expensive homes in the hills. And then, at least when I was growing up, it was a gang infested on the other side. It was
Right. Yeah.
same city can have some very different things, right? But Macon not historically, but I guess I wouldn't say historically, but just the last few years, if you look at some older crime reports, it does look like it could be a scary area. But when you go to the government and you watch what's happening in the city and you see they've added more police force already. They've put in cameras around the city. They're, doing stuff in the community to tamper some of that down. And they've already seen results on it, right? So one of our partners had been watching this area for a couple years. And so he was like, yeah, the stuff they're doing is making a big difference. So, but you won't see that on certain websites that are out of date.
Right. No, it makes sense.
So important to go directly to Chamber of Commerce or the city and do the actual local research. So,
yeah. How about what about the population? Is there anything from a criteria standpoint that you looked at as far as population growth?
Yeah, we like to look at, they need to be at least the U.S. average or above. And then also not just that, but what companies are opening there, bringing businesses there. Because even when the population might be borderline or not as high as we want to see it, then you want to look at okay, what are all the different companies coming in? What kind of, how many jobs are they bringing in? Are they bringing 20? Are they bringing 500? Are they bringing 3,000? How many jobs are they bringing? And then the infrastructure, they're putting a lot of money into the infrastructure, and the freeways and stuff are all being widened and connected and things like that.
Okay. No, that's great. And so you guys aren't quite finished raising for this one. Obviously, you had enough capital to be able to close on the property. So what are you raising for now? Is it for the improvements that you're going to make on the different units? Is that kind of what the balance is, or what else are you going to be raising for?
Yeah, so we do have some money already in reserves. It's cash flowing. The property's cash flowing, and then we have the money from closing, and then the bank requires you to have a little bit of money, and so there's money coming in. and money we're using for renovations. So we're starting with renovations because that is going to bring in more cash flow, right? So like we're starting with all the things that bring in more money, and then we'll get to the other ones maybe like next year or like late next year or the second year. So it's more for like capital expenditures at this point. It's not, anything that's necessary. So we could, worst case scenario, if we didn't get some of that money, then it would just be using the cash flow to do some of those things. It might take a little bit longer, but we're in a good spot.
Yeah.
Yeah.
That's cool. And so, and what is the occupancy now on that building? And then what are you, aiming for?
So we're still about 90%. We were like 95% at close. So we're about 99% right now. We have like 7 pre-leased. So it's, it's still over 90 or more. Most of the apartment complexes are over 90% full.
Okay.
So in the area.
Okay. That's cool. And so did you get a chance to, when you all were doing due diligence, that kind of thing, you mentioned some trips to Georgia. Did you go out there and actually walk the property and get a chance to kind of see what everybody was looking at with respect to due diligence and that kind of thing?
So our partner that found the deal, he had been out there, but the rest of us hadn't. So once the LOI was accepted, we flew out there. And that's when we met with like the property management company we wanted to switch to. So because we weren't going to keep the same management just because they didn't push rents, and even when my other partner asked them some questions, they were like not good answers. Like when you're trying to do a value add strategy, you need someone that's willing to and wants to and thinks you should push rents, right? Yeah. Not just fill. Like they were basically like, oh, we just try to keep it rented. So, yeah, we got to meet like the new property management, and my sponsor already knew them, but like the rest of us like hadn't all met them. So we got to walk the property and then kind of get a better idea of like, oh, like there's more HVAC than we thought in our underwriting, because you do your initial underwriting, but you don't have all the actual numbers and the actual stuff yet, right? So once you have an LOI accepted, then you can go and say, okay, so our HVAC budget needs to go up, because like half these HVACs they look like they're not like dead, Yeah, and then did ask the on-site property manager. She said their biggest complaint was air conditioners going out, and so like that was a big sign too. Okay, we need to put more HVAC, but we also were like, actually, this landscaping budget that we had, we don't really need to do much landscaping. So it was like we put more in the HVAC, took some out of the landscaping. And then we didn't find any major other issues that day. So the property management walked every single unit. We didn't go in every single unit. But we, went into the empty units that had either been renovated. Most of them hadn't been. So we like got to see one that was, and then most of them were very like original, right, stuff. The cabinets were in really good shape. So that was good to see, because cabinets can be one of the most expensive things that you have to replace when you're renovating. Like floor and paint is way cheaper. But so the cabinets were holding up pretty well. So it was more like, okay, we need to resurface these tubs. We need to paint the cabinets when we're doing a renovation. So it's simpler things as a reno. So that was fun to kind of go and like do all that in person. And even just looking at the tennis court that we wanted to rip out because it's original, and tree limbs and whatever everything was like not even, you couldn't even play tennis on it. I wouldn't, because you'd trip,
Right.
But,
yeah.
So walking that area and talking about different things we could do with that. And so I think it's really, if you can walk a property before an LOI, you should. But it's really important to do it like as soon as possible, right after an LOI is accepted, so you have time. Because if we had found other things that were issues, then we would have wanted to like do further inspections on certain things, or, try to figure out, like at one point we were like, I think somebody had said there might be some termite damage near the front office, right? And so the last thing you want to do is find out every single building has termite damage, right?
Exactly. Yeah.
So it's like doing that inspection process and everything. There wasn't anything major. There was stuff we didn't like expect. Like, for example, windows. Like some of the windows looked like they were original, so they're fogged, right? So it's like, okay, some of these windows are going to have to be replaced, but very minimal, right? So, and you don't want to go in and retrade for minimal things. That's why you have your budgets for contingencies and stuff like that. So, so yeah, it was, we did that, I want to say the beginning of June. And then again, after we closed. So we let the property manager, we gave her about a week and a half before we went back out and like walked again and talked about different things and made some decisions on what are we going to work on first. And so, so yeah, we've been out there twice, and it's a beautiful property. It has trees all the way around it, and it's off of a main road, but it's quiet and pretty. That's what I think a lot of people, even when they come in to see the property, to see the apartment, a lot of them will apply because it's a pretty property, you know? So
Yeah. No, that's cool. Well, that's exciting, and it'll be neat to kind of see it change and see the rents continue to climb and see the progress certainly being made on it. You mentioned that you kind of have an interest, a little bit of an interest in RV parks. What's the interest there, and is that just something that you've seen another investor doing, or what?
yeah,
What do you like about RVs?
social media always makes it sound so fun and exciting, right? So there's a few people that post a lot about it that I'm following. And so I was like, I want to do these too. They look so fun. And I've done projects like that, like as far as residential, right? Like, so one of our houses that we lived in, we did a huge backyard remodel. It was like a really long lot and flat. And so we put a pool and a sport court in. And at first we were like, okay, let's put a pool in. And then it was like, well, actually, we don't like this vegetation. Let's rip this out. So we ended up having to work with, I want to say like 8 different contractors, because we redid like the awning. We had a cement contractor, pool contractor, sport cart contractor, the landscaping, and then the air conditioning units, because of where they were, we needed to move them. So, I mean, then we had the HVAC. Anyway, it was just like managing all those contractors. And even though it was kind of stressful at times, because it's like, wait, this guy can't do this until this guy's done, trying to, line that up so it all went smoothly. It was actually kind of fun for me. So I was like, okay, RV parks are kind of like that, where if you can find a value add opportunity, right? Like where you can add value, that sounds fun to me. Like, oh, do we need to put a store in, or do we need to add some kind of rentals, whether it's golf carts or kayaks, or what can we do to like bring in more different income streams? And so that's what I'm looking at next. But I do want to do multifamily too. But I think, I kind of want to just do some different things. I don't know. We'll see.
Yeah, no, well, that's what's neat about real estate for sure. There's so many different avenues out there, whether it be the wholesaling that your son's interested in, whatever. I mean, there's just so many ways to get involved and to make money with it. So, well, this has been really cool, Rochelle. I appreciate you being on the Wealth Flow, and I've got a couple other questions for you. But before I do that, how can folks find out more about you if they've heard about this Macon apartment complex, that they want to still have an opportunity to get involved with it? How can they reach out to you?
So my email is kind of long. It's my name, Rochelle, ROCHELLE at growthcapitalinvestors.com. No, yeah. So they can do that, or they can call me directly, 916-342-5924.
Perfect. All right. Sounds good. And a couple questions I ask every guest is one being, any advice you would give somebody who's maybe just starting out in their investment journey?
Specifically to multifamily, or to any kind of
investment?
Any kind of investment. So I really am a big believer in finding a mentor. Either some kind of a mentor or a program that you can join. Don't waste your time on trying to figure it out on your own. Just don't. It's not worth the mistakes and the money that you can lose. If you, like, for example, I was just at an event last night and they were talking about ADUs, and there were experienced people talking about different projects they've done in all kinds of fix and flips and wholesale situations. And they'd gone into these ADUs thinking it was going to be great. And then it was this mistake, that mistake. And so I think if you have a portfolio to cover you in a situation like that, it's fine. But if you're brand new and you don't have that portfolio to cover problems or mistakes, it's just much better to find a mentor or a program or somebody that can teach you.
Yeah, I think that's great advice.
Yeah.
I mean, if somebody's already done it, it just makes it a lot easier for you to be able to follow. I mean, don't try to reinvent the wheel. And, somebody has already made a lot of those mistakes. So it's better for it to be them and not you. So awesome. How about a book recommendation? It doesn't have to be real estate related, but it certainly can be. Just something that you've read that's been impactful.
So, well, my favorite real estate book is, I know this is silly, but it's Hunter Thompson, his capital raising book. I really like that one. So if you're trying to raise any kind of capital for any kind of real estate deal, that's a great book to read. I really like Dan Martell's Buy Back Your Time. That one is like, for me as a professional organizer and dealing with people that have a hard, either because half my clients were like, I'm organized, but I don't want to set it up. And then the other half could not organize their brain enough to figure out systems and how do I, do all these things. And so I really liked his book, Dan Martell's, because it's like the kind of stuff I would try to help my clients with, but it was like his wording like made more sense, right? Like it was like, okay, this is what I've been trying to help people understand, but his wording is better.
Those are two good ones for sure.
You shouldn't spend time on all this stuff that makes you no money,
For sure.
So,
yeah, absolutely.
Someone else do that.
No, two really good ones for sure. I have had an opportunity to read both of them. Really good books. So there you go. All right. Well, I think we will call it a show. And Rochelle, I really appreciate it. This has been great, and loved and enjoyed hearing about your story. And I'm sure the audience did as well. So thank you so much.
Yeah, thanks
for being
for
on the
having
Wealth
me.
Flow. Yeah.
Nice to meet you.
Nice to meet you too.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.